Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up about 0.3% there. On the S&P Nasdaq, did the same. Semiconductor and Dow, these guys are pretty much flat today. We're also 2000 and transport banks. Guys are up a little bit. Looks like energy is slightly red there. Biotech did get hit about 1% negative. Healthcare, home builders, utility, retail, emerging market, all these guys are up today. It's a slightly green day today. Bitcoin is up, gold, silver miners are down, dollar flat, oil down, treasury bond down, VIX is up a little bit. Let's take a look at the S&P 500 ETF. Spider! 65-minute chart here. So this is where we closed on Friday, and looks like we opened up right here. We actually saw that gap, a little bit of shenanigans in the last couple days. You can see on Friday, actually on Thursday, it looked like market was ready to see that continuation to the upside after a nice, very swift bullish move on Thursday, right? After a little bit of consolidation pattern on Wednesday and Tuesday. A lot of people thought that this is the level that we're going to go back to about 430. Frankly, I thought that also. And probably a lot of shorts covered once we saw this level breaking above it. And, you know, market tends to do something like this here and there just to get you out, just to get you all frustrated, right? And then you can see, we see that gap down. Everybody started panicking, right? And then it looks as though this thing is going to fall right back down, right? Another gap down, another some bloody red days like we've seen in month of May. But out of surprise, we see another gap up. And that's what I call shenanigans. And this is given. As soon as you place the trade in the stock market, you signed up for this. So if you are crying about this market is too crazy, well, it's your fault that you've decided to play this market. And once you decide to play this market, you signed up for this. And so keep that in mind. On a day-to-day basis, there will be crazy crap load of shenanigans you're going to face in the next 10, 20, 30, how many years you're going to play. But a lot of people, you know, probably going to quit after a couple of months. Looking at things short to micro term, that micro term pivot or that micro term moving average, you can see it's been acting as a resistance for some time now, but it will flip back and forth quite a bit. But that level, that light green right here, resistance, resistance, and resistance. The short-term moving average, however, has been supporting the buyers, and that's kind of what's been happening right now is that micro-term is continuing to support the bears, while the short-term moving average been supporting the buyers. So you can see, so that's kind of where the battle is. This is a battleground. We're kind of sandwiched between 414 and 410, as you can see right here. There are a couple times we gotten above it, but with the couple shenanigans that we've seen last couple of days, we're just kind of back at it. So you kind of, if you just kind of look at right here, that's kind of what's happening right now. We're just sandwiched right in between. So it will be a good telltale signal which way it breaks. Is that if we can reclaim the short term, the micro term moving average and stay above it for the first couple hours or so, there's a good chance that buyers are going to try to go after this down gap. The down gap was not fully filled, about 75% filled, so about 15% remaining. This going to favor the bears. If you've been watching my videos for the last couple years, you know this. When the gap isn't fully filled, it will favor the bears, and does hence the kind of a bears move today. They should have filled that gap entirety of it. And because this down gap isn't fully filled, that 15% still remaining, we're back below the micro term. If we can't get up, if the bulls can't get up and fill this down gap as quickly as possible, we're talking next couple days, the bears, the sellers will bring out more heat and make things very hectic. Just keep that in mind, because this down gap was not fully filled. Just keep that in mind, bulls. You must, when you go after, to finish the job, you have to finish the job completely. But the up gap, though, Bulls did a good job, or the Bears with that big up gap was fully filled. So you can see, you already just looking at the gaps alone, you can already see that Bulls are seemingly kind of weak, where Bears are seemingly stronger today, just because all that up gap was completely filled, but the down gap wasn't fully filled. You see what I'm saying? That's why Bulls need to get up there as quickly as possible. If not, Bears are going to bring it down, and if we lose that short-term moving average, 407 and 405 is where the sellers are going. And if we see further decline going into tomorrow and next day, I'm talking to you buyers, I'm talking to you bulls, you must protect this up gap that has been opened up in the last week or so. Because if you don't manage to protect this up gap, things could get hectic for the month of June. If you want to survive this month, the month of June, protect this up gap right here. Let's check out that oscillator. See if we can extract any more information. So, well, things are kind of getting worse here for the bulls, at least in the short term, because now bulls have to deal with this bearish divergence. So this is the opposite from, remember this right here, right there, right? Lower low, higher low. That's what we call a bullish divergence setup. Well, we have the opposite of that. We got that higher high, lower high on that oscillator, and that oscillator hasn't crossed back up yet as of today at close. That thing's still coming down. That means it is favoring the bears going into tomorrow. So what bulls need is like some sort of miracle bullish move to go up and fill the gap. Only way bulls can eradicate and neutralize this bullish divergence is somehow bring this oscillator back up above this horizontal resistance and this falling resistance. That's the only way. So that's, you guys know, if you follow me on Twitter and stock tweets, I tweet every single day on my oscillator. So if you want to keep track of that, where my oscillator is during the day, you can follow me at 2K Kim on stock tweets and Twitter. If not, yeah, bears are going to bring it down. They're eyeing on 407, 405, even possibly 402, because my midterm moving average is residing in that vicinity. That's an important pivot. That's very, very important. You know, midterm moving average does carry impressive resume. We've been, tracking that midterm moving average for a couple months now. You can see there's that resistance. That midterm moving average currently residing at 402.66 as of today. And bears might want to retest that, and that's kind of might be the worst case. If that bearish divergence plays out, if bears are start bringing it down pretty hard, I could see 402, the midterm, average getting hit, and that. And the only question will be, if we do see the price coming down to 402, is that midterm moving average is gonna convert to bullish and start supporting the buyers, right? Old resistance acting as potentially a new support, and that will be the key. Should there be any decline going forward, I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good trading tomorrow.